You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glen Sarvati.
Welcome to another edition of the Big Cast. My name is Glen Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we've got an interview with Karen Houghton, who's the co-founder of Infinite Giving, a financial services startup that is looking at addressing the financial services gap in the not-for-profit sector. A really interesting and valiant mission, as I see it. And actually the author of a new book called Funding Your Mission, coincidentally. We'll be talking to Karen both about her company and her new book. Just shortly, I'll remind you first, you can find out more about the Best Innovation Group by checking out our website, big-fintech.com. Particularly today, I want to remind you about CU Unplugged, an event that we have coming up in collaboration with the Defense Credit Union Council. This is open to all credit union leaders, taking place March 30th through April 2nd at the Visa Market Support Center in Mission Rock in San Francisco. This should be a good one. If you want to hear more details about it, we had Tony Hernandez from the Defense Credit Union Council on last week. I'll post a link to that. It is an unconference, which means we are not publishing an agenda. It is basically designed on the spot based on what people want to convene and talk about, which in this day and age, I think is particularly important given how fast the topics are developing, evolving, changing. So who the heck knows what are going to be the top topics of the day on March 30th, but we'll have people there who are well equipped to speak to them, facilitators, AI to help gather the notes and summarize those conversations. A very active, substantive, and freewheeling, I think, conversation, just knowing my friends in the credit union world. You can find out more but through our show notes, or cu.unplug.com has more information. As I say, open to all credit union leaders, so take a look. I think you will enjoy yourself. Well, every week we seem to have new headlines, and I just want to make sure I cover a few of them before we jump into our interview. The latest, as you know, we've been battling the Credit Card Competition Act again, which has reared its head, as well as the concept of a 10% credit card fee cap. The latest breaking news as I record this is it looks like, at least in the short term, we've gotten a little bit of a respite. Neither of those made it through the effort to be added as amendments to existing House legislative items that we're going through, including one of those kind of must-pass things that people have been talking about in the digital asset side. The attempt was made on the Credit Card Competition Act, much like the Durbin Amendment, to just basically tuck it into a relatively, unrelated piece of legislature and just have it sail through. That did not happen. How the Credit Card Competition Act would be tied into the digital assets bill, I'm not 100% certain, but at this point that's not happening. Speaking of the digital assets bill, though, this is another side thing. That was almost going through a couple of weeks ago, and then at the last minute there became some controversy around some of the provisions that Coinbase didn't agree with, and it got pulled back, which led me, and I haven't seen this in any of the other coverage, since when does Coinbase get a veto on legislation? That one struck me as a little bit odd. We'll be hearing more about that, I'm sure, but neither of those are going away anytime soon. As we've talked about, we were watching both of those throughout 2005. Actually, the 10% credit card cap went all the way back to 2004 as a campaign promise that actually both parties had signed on to. And I'm sure we're going to be hearing more about both. We'll be watching closely. That's a fight that will be continuing, but plenty to be said about that. And again, we've done some past coverage, and we'll post a couple of links if you want to read about a few things that I thought were very insightful in terms of the way to think about that. The other big story last week, Capital One made another big splash, acquiring the business-based credit card company Brex for $5 billion. An interesting one from several perspectives. One, I think Capital One, at this point, I would have to say maybe alongside JP Morgan Chase, it's a very bold move, and they are really establishing themselves as a bold company. As far as, the typical reputation of banks as being pretty traditional and kind of conservative in terms of their approach to things. Yeah, I'm sure you'll remember that Capital One's also the ones who bought the Discover Card network and the Discover Rails. And that deal finally officially closed and integrated just earlier this month. Well, here they are at it again. The market seems to be not 100% convinced that actually the stock took a hit after this. I think it's a pretty interesting move, and I think I need to do more research myself. The other part that I thought was interesting is Brex kind of got some, you know, kind of some shots in the press for selling, basically claiming that they had lost out in the deal. That they had the market to themselves, quote unquote, and then got passed by people who started in that card space for the business world a little bit later, like Ramp. And at one point, apparently Brex had a valuation based on one of their funding rounds of more than double the $5 billion that they sold for. Well, if that's our assessment, one to take a startup basically from scratch and sell it for $5 billion and be considered a failure is, I think, a little ironic and says something about where we are in the world these days. But on top of that, if we are going to assess everybody based on the top of the market, particularly in what we knew was a very inflated bubble of funding rounds back around 2020 and 21, I mean, let's be real. I mean, we all knew, and that's not a function of the management of the company. That's a function of some unrealistic expectations of some of the venture capital firms that funded them. So anyway, I'm finding this acquisition very interesting. I'm going to be following along with it. And as I say on a lot of these things, because it's true, more to come. With that in mind, let's jump in on our conversation with Karen Houghton. As I said, she's the CEO and co-founder of Infinite Giving, a financial platform specifically set up to deal with the cash management issues that face not-for-profits. And as she points out, that our current financial services system just is really not built for non-for-profit companies. And what better match, if I think about that, with a nonprofit sector like credit unions working with these types of organizations. And she's got some really interesting thoughts based on her past experience. With that, let's just have a listen to my conversation with Karen Houghton. I'm here with Karen Houghton, the CEO and co-founder of Infinite Giving, a company I've gotten to know fairly well here in the Atlanta market, and also the author of a new book, Funding Your Mission, which kind of ties to the passion that she brings to this topic of nonprofit organizations. Karen, thanks for taking the time.
Hey, Glenn, thanks for having me.
So let's start, if you don't mind, by discussing your background, because it's always interesting to see how people get into the startup space. You've gone through, I guess, from what my understanding, you've actually dealt with nonprofits before. You've actually dealt with startups in a support role before, but that's kind of how you got the bug to go after it yourself. Can you kind of tell us about how you got here?
Yeah, I have walked that journey. I have been a nonprofit founder and executive director, worked with coffee growing communities in Rwanda, loved the work, experienced the scarcity mindset, built a board, filed for my 501c3, did the fundraising. Long story short, I then moved from there, past the work I was doing, over to another nonprofit organization, still serve on their board to date, and moved into the tech world. So I had a 10-year career in tech and then ended up in venture capital as well. And a lot of that experience, those are two sides of a coin to finance, right? Nonprofit, it's scarcity mindset, it's fundraising, and it's tracking every dollar with purpose and intention and caution. When you get into tech and venture capital, all of a sudden these conversations are talking about billions of dollars with a B, and innovation and the ability to really grow and scale. And having kind of those two unique experiences also lend itself to a lot of board work. And so I've had, seats at finance tables and in venture capital and tech. I've had seats at boards from small organizations in a scarcity mindset to, higher education, where we have a $2 billion endowment. And then, of course, as the fundraiser and executive director, and all of those kind of knit together a passion in me of, man, what would it look like if we could take the best of nonprofits, right, and have more businesses have purpose and direction and mission-minded work behind business, and more nonprofits could act like businesses and take a lot of those foundational and key financial tools and have equitable access and strategies. So Infinite Giving is really trying to bridge those two worlds and opening up an easy to understand pathway of having more financial sustainability for nonprofit organizations here in the U.S.
Yeah, one of the kind of takeaways I saw from the press release, I think around the book, was that the U.S. financial system was not built for tax-exempt entities, which I think is a pretty compelling point. Sounds provocative, but also sounds pretty true.
Well, what a
Kind of
lot of people don't realize is that the US banking system was actually created almost 100 years before the first tax-exempt organization even
wow.
existed. So you have a whole financial system that is made for retail customers, meaning you and I, like individuals and families, or business customers. As soon as you put a tax exempt status on any organization, the compliance requirements change drastically. And all of a sudden, this well run machine has, oh, well, wait, there's all these exceptions, and these people are over here. And then they have different needs and different requirements and different workflows. So when you have a very traditional system that works, but then you're trying to take all these tax exempt entities and just have them fit into this system where they don't really fit, really where we end up is a place where these organizations doing some of the most important work in our communities are not always served well. So things that are very easy for you and I as business owners or as individuals become very difficult when you're a nonprofit. And I don't think everyone always realizes that.
I'm curious, does it sounds to me like, is that an opportunity for, and obviously you're Infinite Giving looking to fill that gap as well, but for financial institutions themselves, is there like a center of excellence kind of opportunity? Are you aware of some that may do it better than others that, they've just decided, okay, we can really, overperform on this sector and maybe gather more of the business of the not-for-profit world?
Sure. And if you're a really large nonprofit, a lot of those barriers tend to go away,
Makes
right?
sense.
But 90% plus of nonprofits are small to mid-size, which we're defining as roughly under 20 million in securities and savings, with the majority of that even being even smaller organizations. And so when you think, like, one stat is that 90% of nonprofits in the US do not have a brokerage account.
That I jotted that down, which also means they're unable to accept stock gifts or grow from
Right.
that
So you're like,
standpoint.
okay, well, what's the big deal? And you're like, well, there's actually some very clear lines that you can draw to that. And one of those is the ability to receive stock gifts, right? That's not the most common way of giving, right? Credit, debit, ACH, all of that. But when you are a major donor or you want to give a generous gift, usually tax efficiencies start to come into play there. And you're like, all right, what is the most tax efficient way to give to an organization that I care about a lot? And that's where stock giving is really important. So it is very common in major gifts to give as securities. You can save up to 37% in capital gains taxes. You also get the full deduction of the gift. And so what happens is these generous donors are looking for ways where they can give in a tax efficient way. And 90% of nonprofits are like, oh, we can't do that. Oh, that sounds hard, or we don't have the ability, or that's too complicated. So those generous givers are going to larger institutions who, of course, have all the infrastructure they need to receive stock gifts, which means the larger orgs get larger gifts and the smaller orgs tend to still get the smaller gifts. And it creates this divide. And our premise is that we wish that a lot of these small to mid-size nonprofit organizations doing some of the greatest work in our communities have an equitable opportunity to easily receive major gifts. Now, the
Yeah, I'm thinking,
financial institutions, right? They're like, they have the ability to serve them. But again, because there's so many complications and more, robust compliance requirements, is not always worth their time, right?
mhm.
And so we were like, okay, well, what if we could just solve that? So by being a registered investment advisor that exclusively serves small to mid-sized nonprofits in a technology company that can make a lot of these processes more efficient, all of a sudden, it's not a pain point to have a brokerage account.
And I'm just thinking, I don't know how you're defining a substantial gift, but I am just kind of combining that with the whole notion of the great wealth transfer, where
Yes.
even if it's not necessarily a large gift, I'm thinking, okay, you've got people who may want to do good by, passing. Again, there's always the tax benefit. So it might not be, it may not even be five figures, but I would think that there's still a need, opportunity to say, hey, I've got this little, appreciated piece of equity. I'd like to pass that along to, some local organization.
Right. Well, the average online cash gift is $128. The national average for a gift of stocks and securities is $8,000.
Oh, okay, much higher than I thought. I
So
know
it does, those
you
are
may have that.
averages, right? And
I was going to
actually,
say there might be median mean kind of thing. I mean, because I'm
yeah.
sure there's some big six-figure ones in there, but I
Mhm.
wonder how many come in at the 750,000 level, something like that. But,
Right. And we process tens of millions of dollars of stock gifts. And when we're looking at that, you certainly have some outliers to your point where, we have seven-figure plus stock gifts coming in. We also have much smaller ones. Sometimes it is $1,000. Either way, how you look at it is these are a wonderful vehicle for tax efficient giving for
yep.
larger gifts versus just the quick, easy credit card donation. So when it benefits the organization and it benefits the donor, ultimately what that benefits is the mission and the work at
Mhm.
hand.
Yeah, another analogy, and tell me if you think this actually works or not, is I'm hearing a lot that I think of as kind of the small, medium-sized business community as well. In terms of, you've got big companies and you've got small ones. You've got the really large folks, but you've got a lot of small players down there like micro businesses and whatnot. And it sounds like that is, again, the Red Cross, Doctors Without Borders, very, very different story. But the local grassroots organizations still need this kind of support, and that's that. And where do you draw your line in terms of what you think of as your sweet spot?
We're defining our sweet spot as small to mid, which is roughly between 1 and 25 million in securities and savings.
Okay, and one, yeah, that's fairly small.
Mhm.
So
Yeah.
that's a pretty wide swath of the market, I would think.
Yes. It's still over a $500 billion market.
Wow. Okay. So yeah, let me just maybe dig a little bit deeper into infinite giving. We've talked about stock gifts, but there's other
Mhm.
services. I mean, basically, are you almost like an opportunity for them to get this piece of the equation off of their plate and really focus on the mission, or is that the
Yeah.
general kind of premise?
Yeah, we are a full financial fiduciary partnership for tax exempt entities. And we're unique in that we can help them receive donations. So, those complex donations of stocks, crypto, donor advised funds, endowments, things like that. We can help them receive donations, manage those donations, and grow those donations. So, those three legs of a stool, if you kind of think about it in our services, the first one is that donation page. We're the only all inclusive donation page that can handle the asset giving and the traditional credit debit ACH. So it's all in one, streamlines it, has a lot of really great technology to make it a great donor and nonprofit experience. We also step into cash management as the second leg of the stool. We're not replacing your bank. We don't want to replace that. That's where your operating cash flow is. That's where your bill pay is. But as you develop reserve funds, as you get a grant that maybe you're not going to buy down for a few months, as you start to build up a capital campaign, then you're usually looking for low risk, highly liquid ways to hold these funds responsibly and with thoughtful stewardship until you need to spend it down. And banks are checking savings, a low rate money market. And if you're lucky, you can do CDs, right? But those aren't liquid. You're locking in low rates. Most banks are not offering nonprofits FDIC sweep programs. So they're opening up multiple bank accounts, not to go over the 250K limit. All of that is solved with a partner like Infinite Giving. So we provide FDIC sweep programs. We do high yield accounts. And then lots of low risk, high liquidity holdings where when you need it, you log in, you hit transfers, transferred into your linked bank account for free. So it's a resource there. And then that third and final leg of the stool is strategic investing. So those are longer term holdings, that's endowment creation. And that's a way to just thoughtfully grow and try to have donors who want to give those major gifts and those gifts of legacy be able to say, yes, we're a small organization, but we have the capacity to receive that gift and make sure that it really provides support for our mission for decades to come.
I seem to recall hearing you talk about this someplace where I saw you speak before. I mean, it's, like, I guess we qualify it as a nice problem to have, but when you talk about a not-for-profit, like you say, that has $1 million, and you don't want to just have nothing but your current, 6 months operating cash. It's a shame to think you can't do something to create a little bit more of a return on that endowment or whatever it is you want to call that. And that's again what you're providing as opposed to, and safety and soundness is wonderful,
Mhm.
but getting something better than a 2% return is probably nice too.
Right. And it's amazing how many, really well-intentioned, smart board members and nonprofit leaders even ask, like, wait, am I allowed to do that? Am I allowed to invest? Like, I thought that's something only businesses could do. Or how do we think about that? And for us, it's let's reframe that. If you are doing really important work, how do we ensure continuity to the mission at hand? Do you want to launch a new program, but be unsure that you can continue that program? Like, how do we make sure that the good work is consistent and not eventually doing, more harm than good? And that comes with financial stewardship. And a part of financial stewardship is ensuring that we have thoughtfully planned on how this work can be consistent and reliable, right? And so a lot of that, just like you would for your savings account for your home, right? Okay, well, what if you lose your job? What if somebody gets sick? What if, something happens? Well, you have a savings account and everybody starts at nothing, but ideally you're putting something away. That's the same kind of thought process for a nonprofit. It's not about just sitting on hordes of money, right? But it's about having intention and purpose. And we walk through that with them where it's like, great, we don't have anything. How are we going to start to have 1 month of operational reserves on hand? All right. How do we want to do 3 months? Sometimes we tell folks they have too much, right? And if you, oh, great, you're at a place where you have even more. Well, let's talk about those funds. Do we want to seed an endowment? Is that going towards a project? Is that just like a 5-10 year project versus a next month project? And then as you kind of build out this sustainable plan, then all of a sudden you're able to breathe a little bit. You're able to tell a different story to your donors instead of desperation and scarcity mindset and month by month. It's like, you know what? We have sustainability and here's the impact and here's how we're going to grow. Just like if we were business owners and we were running like paycheck to paycheck, we had no business model that could actually, mean that we could be sustainable, we would be considered poor business owners. And somehow we have even more expectations of nonprofit leaders, but we want to give them less access and less bandwidth and less financial strength. And I think that that's not how it should be.
And I'm thinking not only the analogy of business owners, I'm just thinking about managing a typical household. And you talk about,
Right.
Whether it's 2 months reserve, 6 months reserve, and same premise applies, which I think makes
Yes.
all the sense in the
Nonprofits
world.
still have, employees, they still have overhead, they still ideally provide insurance, they have buildings, power, right? And so it is still, you have bottom line business expenses. They just have to steward it thoughtfully. There's a lot more transparency requirements. There is a lot more pressure. So it is different. But at the same time, there are a lot of similarities on what our expectations are for well-run organizations.
Let's transition to the book for a second, Funding Your
Yeah.
Mission. You've obviously, you're writing from an area from which A, and B, you clearly feel very strongly, and not surprisingly, it ties in nicely with infinite giving. But who is your desired audience for the book, and what is the main message that you're trying to convey there?
Yeah, that's a great question. The book Funding Your Mission is for any nonprofit leader, board member, even donors, right? It's how do we think about finances when you're tax exempt? And there's a real wide ocean where there's not a lot of expertise in that. You have traditional finance, but it is different when you're a nonprofit. There are different layers to how we think about it and expectations and compliance, and you're stewarding other people's funds. And there's not a lot of guidance out there about what a good financial plan is. How are we thinking about reserves? What is standard? How do we think about strategies? Do we have policies? What is an investment policy statement? How do we write one? And a lot of this is we were like, there's no resources out there. This is already the work we're doing with our clients at Infinite Giving. Let's provide this resource for free. Let's provide a, modern guide to nonprofit finance that kind of talks through. So we do a lot of storytelling. There's a lot of, bottom line practical expertise. We have a whole index with different ways of how you can write policies and different checklists and things. And a lot of it, which nonprofit leaders are great at, is storytelling, right? Giving you a framework to talk to your donors, to talk to your board members, and really write the path of financial sustainability. Because
I'm
if
just
we have
thinking
more financially sustainable organizations, the idea is that we'll have better communities, better society, and a better world.
It feels to me like, I mean, obviously for the not-for-profit leader or founder themselves, sounds like it would be a great one for kind of a strategic board reset as well. Just making sure
Absolutely.
everybody's on the same page.
Yes. Yes, it's a blueprint, right? How can we, how should we, how are we allowed to think about this? What are other nonprofits? How are they doing it? So that's the resources. It's a roadmap, a very practical roadmap.
So what is your primary channel for not for the book, but for Infinite Giving itself? How do you typically how do not-for-profits find you? How do you sell into them? What's your method of interacting?
Yeah, great question. Right now, we work off referrals and SEO. So a lot of folks, it's inbound for us. It's, hey, we've heard about you. How do we work with you? Here's the problems that we need help with. Can you solve them? And it's a really beautiful thing when we get off those calls and on them, people are saying, wait, so you can help us here and here? I didn't know anyone like you existed. This is amazing. And I'm like, no, like you have very traditional processes that are not made for nonprofits. And it's amazing that it's 2026 and we're still the only ones really in that space.
I'm also thinking that, kind of thinking to my, experience in the credit union world, there's a lot of collaboration, not keeping secrets close to the vest. If you've got a happy client, they're more than happy to share that referral. They're not going to keep that as a well-kept secret just for themselves. So you're probably getting a lot of traction from, folks who are already working with you.
We have, we serve just under 400 nonprofit organizations as of today, all over the US. And what we're finding is that often when people volunteer their time as board members, they're actually serving on multiple boards. And so often that comes where they're like, hey, you're serving this organization really well, right? We're in finance. It does take a lot of trust. And so we're getting a lot of referrals that way where it's like, hey, you're helping us over here. Can you also help this organization? Or those nonprofit leaders are like, actually, you need to help my friend over here. I was just talking to them about this. And so I think that unique positioning is finding a lot of value for those leaders, and they're excited to share their great experience with us.
I'm thinking, not-for-profits are almost, kind of purpose built for, fractional CFOs. So if they find success in one organization, they're obviously going to pass it along to the others. So I think that makes good sense.
Yeah, absolutely. And it's when it's all built for you, right? Like when we are built to serve exclusively nonprofits, there are a lot of little nuances that people outside the space are like, I don't get it. It's a bank, it's an investment, one more investment advisor, it all like it's fine, it's not broken. But if you talk to those finance leaders, they all are like, oh, have you ever tried to change the name on a brokerage account? Have you ever tried to change the name on a bank account? Have you ever tried to pull a board report? Who's written the policy statement? These are small things that Infinite Giving makes really easy. And it is a very it gives a lot of time restraints to teams who are usually having multiple hats. Even something like opening a brokerage account, you and I could go online and do it in a few minutes, right?
Yeah,
When
good
you're
luck.
a nonprofit, it's
Yeah.
a 50 to 75 page application, wet ink, snail mail. You're still going to pay fees. There's usually even Schwab has like a 250K minimum, right? And why is that so different? And so for us, we are the only nonprofit online brokerage account opening that exists in the US. And it takes a 6 to 12 week process down to a 30-minute online account opening. We have you up and going in 3 business days.
Not quite the exact same thing, but I remember when I was serving on the board of a not-for-profit cooperative and we were looking to expand and had to take out a loan. It was like, okay, well, who's actually standing behind this if it doesn't work out? Well, yeah,
right.
That's kind of a tricky question. So yeah, I can
Yes.
see that.
Even nonprofit leaders have to personally guarantee credit cards.
Well, okay, there we go. There we go.
Right. You're like, what do you mean? Like businesses can go open all these different credit cards, not nonprofit leaders, when they're personally guaranteeing things for their job. So there's just a lot of complex things that I think until you're exposed to them, you don't realize how painful it actually is. And then those nonprofit leaders are like, this is what's available to us. It's only what we know. So they handle it. But the idea that there's something new and different that can make their lives easier, increase transparency, increase efficiency, give them better returns, all of that becomes an easy win.
Yeah, that's a great anecdote. I hadn't heard that one before. One last question. I mean, I think you would probably agree that we're living, or any not-for-profit right now is living through interesting times. I mean,
Mm.
there's a lot of shock going on in the system, with regard to donation patterns, government funding, things along those lines. How do you see the outlook? Is this a bump that we'll have to live through this kind of stormy pattern, or do you think it's a permanent reset of the way these things are going to run?
Yeah, 2025 was hard, as you alluded to in many different ways. I don't think 2026 is going to magically solve any of them. But the good news is, or at least how I see it, right? Most of us in the nonprofit world are eternal optimists.
Mm-hmm.
And so when times are hard, that is often when the need for our nonprofits and our communities shine the brightest, right? And these are people who are resilient and who are willing to put the work in. And so I think on the other side of some of these challenging times, what the kind of force kind of lever is making us think about sustainability. We're thinking about donations differently. We're thinking about diversifying our revenue and like how we're bringing those funds in. We are rethinking how we manage money, right? If the biggest thing for a nonprofit is how do we bring in more funds? Well, sometimes taking money from your, bank money market or your checking and savings account and moving it into something very conservative, but that can double your yield, that's the easiest way is to create money for money, right? And so I think there's these things where nonprofit leaders are giving ourselves permission to think a bit more strategically. It's required now. How do we manage our funds? It's not just about bringing the money in, it's about managing the money and doing it thoughtfully and maybe making short-term cuts for long-term sustainability. And I think ultimately that's going to be a really healthy thing for the sector. And I think our need for these organizations is being highlighted as well.
And that makes great sense. Well, Karen, this has been a pleasure. If people want to find out more about the about Infinite Giving and the book itself, website for the organization.
Yeah, you can find us at infinitegiving.com. We're happy to schedule a conversation and just see how we can be most helpful to you. And you can find the book, Funding Your Mission, The Modern Guide to Nonprofit Finance on Barnes & Noble and Amazon.
Good. We'll post a link, and I guess it's probably also you can find out more about the book. I think you might even have. Do you have a chapter available on the website?
We do, yes. Under
Yeah.
resources, we've got a lot of great free resources as well. And there's a link to the book in the first chapter for free as well.
And I know you've got some great blog posts as well. So yeah, lots of stuff to check out at the website. We'll include both of those in our show notes. Karen Houghton, CEO, co-founder of Infinite Giving, and the author of Funding Your Mission. Thanks for taking the time.
Thanks, Glenn. Appreciate it.
So we'll post a few links here, both to the Infinite Giving website itself, as well as the Funding Your Mission book that has been written that we talked about. As I said, it's talk about people helping people. We got it coming from a couple of different angles here. Seems to me that this is something the credit unions, as we've been looking in a lot of other areas around business lending and things like this, talk about a alignment of mission, working more with not-for-profits. And there's plenty of credit unions that already do that. But from a financial services standpoint, I think there's a real unmet need that Karen and Infinite Giving have identified and worth taking a look at. With that, another episode of the Big Cast in the books. Again, my name is Glen Sarvati. You can check me out via my firm 154 Advisors. You can find me on LinkedIn. You can find me also through the Best Innovation Group website, big-fintech.com, where you'll find lots of other great information about things that are going on, including our CU Town Hall, which I believe will next be meeting on February 18th. That's a Wednesday. cutownhall.com. You can request an invitation to join us. It's free to join. You do need to register in advance. You can also find out about Big Merger AI and lots of other initiatives we have going with all the mergers going on in the space. My buddy John Best and his crew have put together a really nice that's not a package, I guess a process, leveraging AI to help make that process go much smoother. One of the many things you can find out more about by checking out big-fintech.com. I'm about to be hitting the road. It's a little early for the conference season to really kick into high gear, but it seems to be doing that for me this time. I'll be speaking at Deluxe's client conference next week. We've already got an interview lined up with the CEO of Nacuso, who will be here next week having a conversation about their upcoming conference, which is a little bit later in the season. I'll also be at the Finovate UK. I doubt anybody else, unless you're listening from London. If you are, track me down. I'll be in London for the Finovate UK in, I believe that's February 10th and 11th. And if you're not there, and I'm guessing that I'm going to be one of the few Americans there, we'll find out if that's true or not. But I'll be coming back with some interviews from that one of a batch of companies. I always love when this happens. Looking at their roster, there are very, very few companies that I have seen speak before, and a lot of them I'm not even familiar with. And that's why I like to go out to these things. Again, my name is Glen Sarvati. The company is the Best Innovation Group. We're here every Tuesday with new content. You can find us wherever you pick up your podcasts, Apple Music, Spotify, etc. But the media tab at Big Fintech is always there for you. If you subscribe wherever you happen to stop by, we'll let you know every time there is new content. As I say, that's typically on Tuesdays. Hope we see you again next week, and thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech. Email info@big-fintech.com or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.